Welcome again on our another edition of Kotak Cherry 2023 in Focus. Today we have a very special guest with us. We have Mr. Nilesh Shah, MD, Kotak Mutual Fund. Hello, Mr. Nilesh.
Hi, Shubham. Pleasure to be on Kotak Cherry platform.
Great, Mr. Nilesh. So, Nilesh bhai, coming straight to the point, 2022 Indian markets, global, there has been a lot of turmoil. Uh, we have seen how the Indian markets have outperformed global peers. Do you expect that this trend to continue in the years coming forward?
So in 2023, Shubham, the only thing certain is uncertainty. There are so many factors which are at play. Russia-Ukraine situation is not yet settled. If it escalates, our markets will fall. If it de-escalates, our markets will benefit. US Fed is raising interest rates. And as of today, market is expecting peak interest rate at about 5% somewhere in first quarter of 2023. And it is also expecting rate cuts by third or fourth quarter of 2023. Now, if Fed raises rates more, then our markets will be impacted. If Fed starts cutting early, our markets will benefit. The third thing is also global recession. European Union, US, China, these are all in different orbit in terms of slowdown, in terms of growth. That's also will have an impact on our market. So put together with so many variables, will it be fair to say that we will be able to predict 2023 outlook? Answer is no. We'll have to play the ball as it comes rather than premeditate the shots. There will be some factors which will work in our favor. There will be some factor which will go against us. In 2023, only thing certain is the uncertainty. There will be volatility in market as events happen.
Right, Nilesh bhai. I think that's very well said. I think the only thing certain is going to be uncertainty. Nilesh bhai, also, we've seen a trend over the last couple of years that there has been higher remittance and more and more people also taking the route of investing into markets overseas. So considering with all the volatility with respect to recession, with respect to interest rate hike by most of the global central banks, how should a new customer or a new investor coming in, how should they look at asset allocation, whether they should also allocate certain portion of the money into overseas markets, considering from a domestic standpoint, there's a higher or relatively higher stability compared to what we are seeing in the global peers?
So Shubham, from an asset allocation point of view, the return differential between, let's say, debt, equity, real estate, and commodities like gold, silver will be fairly minimal. We expect equity returns to moderate. And there will be a point of time where equity may even give negative return. In equity asset class, buy on dips will be the best strategy. Or investing with a long-term outlook will be best strategy. On the debt side, we believe target maturity funds will be appropriate. At least if you wait till maturity, what kind of return you are likely to get. We believe even precious metal like gold and silver are now making bottom, and they should deliver reasonable return to investors once US interest rate starts coming down and US dollar also starts following. So 2023 and beyond, like before, will be all about asset allocation. Don't be a momentum chaser. Looking at past performance, try to invest. Don't be a trader, be an investor. Don't get concentrated in one sector or one stock or one asset class. Try to be diversified. Now, within that, international investment also comes handy. Unfortunately, in mutual fund, we have exhausted our limits, so we won't be able to accept most investors' money, bearing few exchange-traded funds. You are Investing in offshore asset classes from 2 points of view. One, it gives you geographical diversification. God forbid if tomorrow India and Pakistan or India and China goes to a war, your global investments will do far better than the local investments. So you get diversification. The second thing is also exposure to certain businesses which are not present in India. For example, we don't have companies equivalent of Google or Microsoft or Apple or Meta. Those companies are available only in offshore market. So either go for geographical diversification or go for businesses which are not available in India for investment. That should be your driver for offshore investments. Should an investor put between 5 to 10% of their portfolio in offshore assets? Answer is yes. That should be something which one should try.
Right, Nilesh bhai. I think with customers looking to diversify overseas, and like you rightly said, 5 to 10% allocation could be looked into from an overseas point of view. But focusing on the Indian markets, focusing on the domestic front, we have seen again the large cap space, precisely outperforming the mid and small cap space up in the year 2022, or if we consider the last 12 months. Where should an investor, look to buy the dip? Should it be in the large cap space? Should it more be tilted towards the mid and small cap space, considering they have slightly underperformed the large cap space till now?
From a valuation point of view, between large, mid, and small, there's not much to choose from. Now, if the events continue to shock the market, like Russia, Ukraine, like US Fed, like energy prices, then large caps will do well despite their outperformance over small and mid cap. On the other hand, if events start surprising the market on positive side, then small and mid cap will do, because large caps have already outperformed small and mid cap. My feeling is that this is not the market where you take a very brave call of being in large cap or being in small and mid cap alone. I think it's important to maintain equilibrium between large, mid, and small, depending upon your risk profile.
Right, Nilesh bhai. Right. Also, Nilesh bhai, if we look into 2022, how it has gone by, and it has been more of a sector-specific market. Some sectors doing very well, some sectors underperforming. We have seen how banking sector in the last few months they have picked up, and banking sector overall, if you look into from a 12-month perspective, they have done pretty well. Whereas on the other side, if you look into IT as a pack, they have slightly underperformed. So, what would be your key insights with respect to what sectors are going to do well in the coming year? What sectors one investor should look to stay away from, considering the heightened volatility, both from the global or the domestic front?
So, Shubham, sector rotation is the nature of the market. What goes up comes down, and so on and so forth. Today, what we believe is that there are sectors where there is a secular growth trend. For example, India's manufacturing sector. In chemicals, we are increasing our global market share. In capital goods and engineering, we are becoming part of global supply chain management. And that sector is also getting supported by revival in private capex. On consumption side, while right now the volumes are a bit subdued, but if economy does well, consumption sector can take off. So overall, we still believe there are sectors like manufacturing which should do well. There are sectors like IT and pharma which hasn't done well last year, but they should provide an attractive opportunity to invest in the days to come. There are sectors like banking which has done extremely well. We believe now, instead of multiple changes, it will be the earnings growth which will deliver return over there. So there will be few sectors which will do well in 2023, and few will provide you opportunity to invest with an outlook on 2024.
Right, Nilesh bhai. Nilesh bhai, one final question. What would be your final views to our audience, how they should go about with their investments? I believe you've mentioned it all. Don't overinvest, or don't have concentrated bets. Any word of advice for our investors?
So one, be ready for volatility. Markets in both debt, equity, real estate, commodity will be like a roller coaster. There will be sudden ups and sudden downs. When you enter into a roller coaster with the assumption that I'm going to go through ups and downs, half the pressure goes away when actual ups and downs occur. And as long as you don't jump out of a running roller coaster and just stay seated in the roller coaster, at the end of the journey, you enjoy the ride. You feel happy that I took this ups and downs. The same thing is in market. When you are entering, be ready for volatility. And when volatility indeed arrives, don't jump out of the running roller coaster. Stay seated, stay invested. Eventually, you will reach to the end of your journey, achieve your objective, and say, okay, I enjoyed the ride. So just imagine equity market, debt market, commodity market, currency market, real estate market as a ride on the roller coaster. Be ready for volatility and stay invested through the ups and downs.
Well, I think that's very well put out, Mr. Nilesh Bhai. I think that would really help our audience away. And thank you once again, for taking out time and providing your valuable insights as to how people should look forward with respect to their investments in 2023.
Thank you, Shubham. Wish all your viewers a very happy new year and happy investing in 2023.